Welcome to the Decode. This is our very first video. I'm Ira, an AI-generated voice created to explain finance with clarity and calm thinking. This channel is built to help you understand investing, company earnings, and long-term wealth creation. No hype, no predictions, just clear explanations, disciplined mental models drawn from great investors, and ideas that compound over time. Let's begin by decoding our first concept. You know, most of us think that building wealth has to be this really complicated thing, full of big, complex decisions. But what if that's not true? What if the most powerful way to build wealth is actually through profound simplicity and maybe almost boring levels of patience? Let's explore that idea using the playbook of a great investor, Mohnish Pabrai. This quote from Einstein really gets to the heart of a paradox, doesn't it? We're all conditioned to believe that to get extraordinary results, you need these incredibly complex strategies. But the truth is, the really great investment ideas, they're often the ones you can just get in a single instant. And they're not complicated. They're just simple. Okay? So here's the problem. Simplicity, it just feels wrong, doesn't it? I mean, our entire world seems to reward action and complexity. So as investors, we feel this constant pressure to be doing something, tinkering with our portfolio, making trades, basically proving that we're smart. And that right there is our flawed default setting. And this really captures that contrast perfectly. On one side, you've got the default investor, always busy, chasing the latest hype with these intricate models. But on the other side, you have the anomaly hunter. And look at the difference. They're trading in those complex spreadsheets for simple, back-of-the-napkin math, daily action for years of patience. And they're actually looking for the boring stuff that everyone else is ignoring. So what exactly is an anomaly? Well, think of it as a rare opportunity that is so obvious it basically hits you in the head with a 2x4. Yep, these aren't some hidden gems you find buried in complex data. No, they are glaring, obvious mispricings that the rest of the market, which is usually caught up in fear or complexity. Let's make this real with an example. Back in the early 2000s, there was this shipping company called Frontline. And on the surface, this thing was a total disaster. Oil demand was down, shipping rates had collapsed. The company was literally losing money every single day. As you can imagine, the stock was just completely crushed. The stock price had cratered all the way down to just $3 a share. So to pretty much everyone looking at it, this company was just spiraling toward bankruptcy. It was the absolute definition of an ugly, unwanted investment. But here was the anomaly, the simple, head-slappingly obvious part. If you just did some simple math, calculated what the company's ships were worth, imagine selling them off and paying back all the debt. You'd be left with $10 per share in cash. The gap between the price, $3, and the value, $10, was just enormous. And it was right there in plain sight. And here's the simple insight that unlocked the whole thing. The company's debt was something called non-recourse. All that means is that the debt was tied to individual ships. So if a loan defaulted, yeah, the bank could take that one ship, but they couldn't touch the rest of the company. That one simple fact, something you absolutely did not need a spreadsheet to figure out, meant the actual risk of the whole company going bankrupt was incredibly low, okay? So to find opportunities like Frontline, you need a really powerful filter. And Pabrai borrows a great one from Warren Buffett, the too hard pile. This is just a mental filter. Though for Buffett, it's a literal physical box, where you toss almost every single idea that comes your way. And its whole purpose is just to maintain ruthless focus. So what exactly goes into this too hard pile? Well, pretty much everything. If an idea needs a complex spreadsheet just to make sense, it goes in the pile. If you can't explain what the business does to a 10-year-old, yep, it's too hard. And this isn't about being lazy at all. It's about discipline. It's about having the patience to wait for that one idea that is truly, undeniably simple, all right? So if it's really that simple, you have to ask, why doesn't everyone do this? Well, it's because it forces you to overcome some really powerful psychological barriers. Patience feels like you're doing nothing. Simplicity feels like you're not being smart enough. And just waiting for that perfect pitch, it can be agonizing. The story of a man named Rick Guerin is a perfect cautionary tale for this. He was an early partner of Warren Buffett and Charlie Munger. By all accounts, he was just as smart as they were, and he was involved in a lot of their brilliant early deals. But he had one critical flaw. Warren Buffett explained it perfectly. He said, "Charlie and I, we knew we were going to get very rich. We were not in a hurry to get there. But then he added, Rick. Rick was in a hurry. And because he was in a hurry, he used leverage. He used debt to try and get rich faster. And that impatience, that was his downfall. When the market crashed back in 73 and 74, Rick got margin calls. He was forced to sell his valuable Berkshire Hathaway shares back to a very patient Warren Buffett for just $40 each. Basically a pittance. He wiped himself out. The crazy part is, he was right about the investment, but he was completely wrong about the timing and the method. And this really brings us to a crucial point. It's not about being a genius. As Buffett says here, the formula is almost shockingly simple. Be a slightly above average investor, spend less than you earn, and don't use leverage. You can't help but get rich. See, the difficulty isn't in understanding the formula, it's in having the incredible patience to actually follow it for a lifetime. So how do we actually find these simple anomalies in the real world? Well, it all starts with understanding the difference between two very important concepts. Two ideas that Wall Street gets wrong all the time. The whole key is wrapped up in this one question. What is the real difference between risk and uncertainty? Now, they might sound like the same thing, but for an anomaly hunter, oh, they are worlds apart. Okay, let's break this down because it's super important. Risk. That's the chance of a permanent loss. It's the probability that you will not get your money back. Period. Uncertainty, on the other hand, is just a wide range of possible future outcomes. Now, Wall Street hates both of these things, but it really hates uncertainty. Think back to that frontline shipping company. The risk of permanent loss was actually very low. The ships were worth more than the stock price, but the uncertainty about when the business would turn around, that was extremely high. And it's right there in that confusion that you find the opportunity. So this gives us a simple formula, the anomaly hunter's formula. Step 1, find a situation where there's a low risk of permanent loss. Step 2, make sure there is high uncertainty about the outcome. When you find that combination, the result is often the potential for really high rewards because the market is just too scared of the uncertainty. You know, this all builds up to a final, really powerful idea. This entire playbook, it's really about embracing the power of being boring. It's about accepting that the real work of investing isn't all that frantic trading you see on TV. It's patient reading, thinking, and just waiting. And if you ever, for a second, doubt the power of that patience, just look at Warren Buffett's actual hit rate. Over nearly 60 years of running Berkshire Hathaway, he's made hundreds of major investment decisions, but only about 12 of them are the ones that truly move the needle. 12. That works out to roughly one great idea every 5 years. Think about that. That should give all of us permission to be incredibly selective and incredibly patient. This quote just sums up the whole philosophy perfectly. Make very few bets, make them infrequently, and then when the moons align, when everything lines up just right, you bet big. See, it's not about constant activity. It's all about preparation and being able to recognize that rare moment when a simple, low-risk, high-uncertainty opportunity finally shows up. And when it does, you act with real conviction. And so, this leaves us with a final thought, a question to ask ourselves. We spend so much time and energy asking, what's going to perform the best? But maybe the better question is this: am I looking for something simple? Or am I just looking for something exciting? Because finding the honest answer to that question, well, that might just change everything. That's our decode for today. Thank you for listening. We decode mental models, company earnings, and timeless ideas every week. If found this useful, please like the video and subscribe for more.